Good morning, traders. Welcome to the Traders Lab. I'm your host, Tom B. Can I please get a screen and audio check? Morning, Marty. In YouTube and Bookmap Discord TraderLab community. How are we doing in YouTube? And good morning, everybody. This stream's about integrating Bookmap order flow tools with auction market theory using the volume profile as a chassis in the intraday developing timeframe. It's based on structured trades that are available to all of you to reverse engineer and research to develop a business plan for the business of trading. The business of trading is a statistically based business. It is not a predictive business, and it's not based on how you feel. If you trade that way, there's a good chance you won't feel too good, but of course, maybe you'll be the exception. However, from a business perspective, if we understand the actual environment we're in, we can build structure around an environment that's 100% random 100% of the time. It's really a gaming business. It's not a be right business. It's not a confirmation business. It's not certainty business. It's a business of randomness. Our human nature or primal wiring is to look for certainty, to avoid risk. That primal wiring was developed over, shall we say, the millennia or whatever, and it is part of why we are here as a species, if you accept that. However, that operating below the hood, as I like to think of it, or under the hood, is always operational and always seeking survival of the species. So that mechanism, which is primal and under our consciousness, is always active, is always watching, and is always interfering with our intent. So the thing to understand is if we can't have certainty and we cannot escape risk, especially in this business, then what we must do then is learn how to coexist with risk and build solutions that can potentially allow us to operate with a statistical edge in an uncertain environment. I hope that makes sense. That's why I created TraderLabs to help developing traders understand the business they're attempting to be in. And, you know, like everything, past performance is never indicative of future results. You have to do the work. But the TraderLab community is available to all of you. And if you're visiting in YouTube, there's a link there. You just need to verify your Discord username. You will not be spammed, solicited, nada. And then you can visit the TraderLab community. There's a substantial number of participants in this community. There's no cost, but it's professional. General disclosure. All Bookmap Ltd materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure. Trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. I have a little something to tell you about. We have a actual little contest thing going on here at Bookmap. And anytime you guys have an opportunity to, as they say, score a Bookmap freebie, go for it. So here it is. Do you want to earn 3 months of Global Plus completely free? Here's all you have to do. Take screenshots of your setups or your trades, annotate them, a little circle, a little arrow, a little box of, hey, here's what I'm doing, and just post it. You don't have to register. There's no signing up. You can stay under, behind a bush or a tree if that's what you'd like to do. And just submit it on X, Instagram, or LinkedIn with the hashtag FreeBlueJacket. And then you have a chance to win over $600 of subscription value. So it's 3 months of Global Plus and data. So all of that at no cost. Now, here's another thing. What about if you're not a Bookmap subscriber yet and you've never used an order flow tool, but you'd like to kind of get your hands on it, right? If you go to bookmap.com, there's actually a free digital version. I don't know why nobody talks about that, but you could actually get your hands on Bookmap. You can play around with it a little bit. There's tons of educational support out on YouTube, and then of course in the Bookmap server, you can kind of get a sense of what you're looking at, or just follow these streams where I go over these processes every day, and then do a screenshot, mock it up, post it, and you have the same opportunity as anybody else to win 3 months of Global Plus and data. I'm going to suggest do it. Why not anyway? So anyway, give that some thought. And it's for the month of August. So you got all month, but sooner is better. The more you submit, the better opportunity you have. Just something to think about. Now, this is what I showed yesterday. By the way, in yesterday's stream, I talked about a couple of things. Now, this is day before yesterday, okay? So if you watch yesterday's stream, this is what you're going to see. Now, here's what's kind of important. I want to take you back to some of the important elements. It was a swing low for this move up. We came down on Friday, took out this low, grabbed the inventory, and it looked like it was the end of the planet. Okay, 64.5 was the high volume price. We got under here. Now, when you come outside of consolidations, and this is a big consolidation, look at the range, it's almost 200 points. So we're not talking, as they say, change here. We're talking a real move. So when you come under and there's no selling underneath, then all the longs in this leg basically got thrown under the steamroller. So now what? So this is Friday. So we had the gap, and this is an over-under. Let's go back and please review yesterday's stream, because I'd rather move forward than go back, but I have to go back to go forward. This is what trading is. We go back to look forward because we have to see what happened. What does it mean? And this is part of what happens in TraderLab. What does it mean? And if we can determine what it might mean, not what it does mean, what it might mean, then what do we do about it? And that's called a trade plan. Let's look at what this means. This is our all-time high, and this was last Thursday. I call this the Acapulco cliff dive. And everybody who was long in here, and we thought this day here, I thought really we had cleaned out the weak longs, and with this close, we were going north. Well, yeah, we went north until it was like, we'll see you later. I'll send you a postcard from the edge. Now, this is an outside edge of all this volume. So when we're rocking and rolling up here, everything is wonderful. And this is the retail price or highest volume in this area divided by this. Then on Monday, we gap out of this distribution and we revisit this one down here. And that's where we cleaned out these guys. Thanks for playing. This is when your broker sends you a gift basket. Now, in this day, this is the retail price, 64.5. This 63.03 is the highest volume in here. So think of this in a consolidation or higher time frame retail price. What was the retail price up here? 64.06. Highest volume up here divided by that. Down here, highest volume. Gap. Squeeze-a-teria, right? Now let's come to yesterday and see how this thing behaved. The low of the day yesterday, 63.03-ish. By the way, horseshoes and hand grenades. This is auction. This is how you can use a tool, the volume profile. Now, the volume profile just shows us something pretty important. What do the participants think of value? Because the purpose of a market is to figure out what's this thing worth. What's too high, what's too low. And I always like to say, yeah, good luck with that. Because inside of the day are rotations. So as day traders, we're going to take these concepts and drill down into fractals or shorter time frames. So this is yesterday. We open, and if you remember yesterday, it was longs. And the idea was to potentially come back and test this area, the dividing line between these quote distributions, and fill the gap. And this was the primary idea. And of course, it never has to go anywhere. This was the area for me, the 56-ish was kind of the idea. Now, this day, when we did the Acapulco cliff dive, this 74.5 was the retail price. I call it retail, it's high volume. Think of it like shopping. Wherever buyers and sellers agree to do business, right? You buy your bottle of mustard, that's the retail price. That's where buyers and sellers agree. You'll pay it, they sell it. So, but this is the end of the day and we ran out of time, but who knows? But that was now resistance, and in different fractals, This is support. Okay. This 46 is support. And this is called the value area. I'll get into some of this, but if you're interested in any of this, you need to come to TraderLab because I can't, go through all this. So this sets up, and this is as of the close yesterday. So our targeting is potentially here, 74, down to 46, back here, and out the bottom. And who knows? Now, here's one more simple little thing, and it's so simple. In fact, one of our longtime participants in TraderLab named Repeat made a comment today. He said, I always thought this was kind of silly when Tom says this. Now, I've been saying this for as many years as, since I started TraderLab. And that is the market goes up to go down. The market goes down to go up. The market goes up to go down. The market goes down to go up. The market goes, and I don't know if it was coming or going here, let's say down to go up, or maybe it was up to go down to go up, up, go down to go up to go down to go up to go down to go up. I don't remember where this one closed. Down to go up to go down to go up. And then what's next? Up to go, let's look. Are you guys tracking? By the way, if you have questions, please post them. This is auction. The auction is how the market prices. The other part of the auction is it rotates over itself. Just add a little excitement to your life. Why doesn't it just move in a straight line? Because the participants try to figure out what's too high, what's too low, and it's always rotating. So even though we can have these higher time frame levels, how it gets there, that's a whole nother conversation. So now let's look at where we are. RTH open, 8:30 my time, Central Time. These levels are the levels that I've pulled off of the higher time frame. We have yesterday's high. And what's a yesterday's high? Stops, right? Anybody who's short, who knows? Settlement is down here. Yesterday's value area high, important, is here. And for me, my first trade was a short. Now, how that turns out, this is life in the fast lane because this is trading. There is no holy grail. Everybody takes stops. So, but if you're in TraderLab, you would pull out your structure. In other words, your trade plan. You would know what you'd be looking for your first trades. And when we open in range, but out of value. So yesterday's high is here, where RTH open is here. So we're in yesterday's range, but value or value area high starts here. What is this value thing? 70% of the volume, according to, those in, or one standard deviation, basically is called value or value area. So yesterday, the highest volume was here. So above and below this price, or wherever 70% of the volume is, this is considered a fair area. So like a retail price, and then it oscillates or rotates around it. And most of the volume is in here. Now there's books written about this. You can, you don't need me to tell you about this. You can find this online. There's a bazillion things written about profile. And like everything, you have to adapt all of these ideas to something that's material for you that actually creates an edge. A lot of concepts in trading are really nice in a book, but try to use them. That's why most retail traders, in my opinion, don't succeed, is they don't understand the business side of this, which means vetting and creating an edge. Knowing where your trade shows up, not just a random indicator and they all have winning trades. No indicator has winning trades. We all have winning trades. But what actually gives you a statistical edge? That's actually the work. And it's not going to be in your indicator box, in my opinion. It's going to be in the work you do to throw out the things that are just noise so you can differentiate between something that has use and something that's just useless. So RTH open. Now, when we look at our contact sheet, which is a grid sheet I created and shared in TraderLab, are we opening in range? Yes. Are we opening in value? No. What does it mean? The market is out of balance. What do we anticipate? A overlapping or something called a normal variation day. So not much change. But what else do we know? Yesterday's high. Let's go look at our statistics for opening higher in range. Now you have to vet everything for yourself. This is based on research I've done over many years. I've been doing this 46 years, and others. TraderLab's a community of traders that have come together. There's a lot of work going on. TraderLab is for serious traders. This is an advanced methodology that I'm sharing, but it is not complicated. It's actually simple. You need simple so you can make, you can have anchored inputs to make, quote, decisions and vet something, because it needs to be the same. The market is random. What you do needs to be the same. If it's not the same, then you're the gambler. You're being random in a random environment. Good luck with that. Make sure you get the cocktails and the ticket to the buffet, because you are a gambler. Now, the house does not gamble. The house only play games that have a statistical edge, and they accept the random outcome or the random distribution of outcomes. They don't control cards, right, coming out of the deck, or how gamblers play the cards, but they do control how they play the game. We're in the same business. Now, you don't need to accept it, but if you did, it would give you an aha, like, oh, if I'm in that business, maybe I might want to replicate a successful business model versus some fantasy I have about what this business is, which I can assure you, most of you do not understand the business. And if you've been working hard and coming and waking up in the same place, I call that Trader Groundhog Day, you might want to do something different. So getting you yesterday's high, considering where we closed, and we were squeezing the heck out of the shorts. What does the market do? The market goes down to go up. The market goes up to go down. What did it do yesterday? It went up. What might it do today? Take the longs out. Who got squeezed? The shorts. Now we have new longs. What happens to the new longs? Well, maybe they get thrown under the bus. That's what creates our rotations. RTH open. Hold on one second. I got to turn some levels off. One moment. Just give me a second here. And we'll put them back on if we get into real time, which I hope we do. Hold on. And by the way, thanks for visiting TraderLab today. If you're in YouTube, by the way, please give a like. Hope you get something out of this. 1 second. Okay, here we go. So RTH open. Now, we're opening. Look where we are opening. Settlements here, and we're right near yesterday's high. Let's look at a couple other little tidbits in here. ETH high. Now, what do we know about this level? This is a naked volume point of control. When you hear the word naked, don't go running out of the room with your hair on fire. What this means is that this level was the highest volume or retail price. I'm going to try to tie all these pieces together. 74.5 was the highest volume from this down day. Retail. In the ETH, we're testing it. Let's come back now. Now, I'm trying to spend time here with you because I want you to understand. ETH high, last auction. What do we know? Well, if we test a level, maybe it's too high. I don't know. Now, let's go a little further. So, Friday's RTH. I'm not paying that. Get out of here. This is going to the store as a shopper. You got to be kidding. Leave. Now, in the ETH, this is the highest volume. The last auction, this is the volume. So that's too high. Maybe. Don't know. This is the retail price. This is the value area high. And from yesterday, this is the retail price. So let's go a little further. Value area low. ETH low. So look where I am. I'm compressed. ETH high, ETH low, settlement, value area high. If I get inside of this, I can go to this. Check the price. If it's too low, I go up. If it's still too high, hasta la vista, I'll send you a postcard. All of this is right on the open. Is this how you operate? Is this how thorough your plan is? If not, are you playing a video game? Now, I can't answer that for you. And by the way, you're still going to take stops. So let's get over that. Casinos pay the gamblers. So what is this? This is pre-RTH open. I have heavy selling here, or I should say liquidity. Notice this jumps in the book. Now this is how order flow can help you. So as I'm coming into the RTH open, the market opens. This yellow line is called developing volume point of control. Let's label it. This is like shopping. And when I label these, what I'm labeling is, it's like you go to the store, here's the price, okay. And what happens if this price is too high in a developing time frame? We leave it. What else do we know? What we know is selling icebergs, liquidity, more sellers. Now, I'm not able to do anything here. By the time I'm able to do something, my eyeballs are on the floor. So let's go look at what it says. Language. Sellers are here. Okay. VPOC migration. Now, those of you who follow the stream, you see this. Here's the thing that's interesting, I think, about trading. Most of us are responding emotionally, FOMO and all that to the market. However, if you're in TraderLab, the idea is that you have a plan and then you wait for the market to come to you. It's like a bus stop. Now, I'm going to label this one variable high volume node. Now, what I'm doing is I'm tracking the auction. Now, when the market opens, there's zero volume, right, in the RTH. So this thing is very sensitive. It jumps around with the volume. But so now this is called VPOC migration. I did a specific webinar on it, and I always talk about it in the streams. This is the most advanced part of what I share, and it's the last place developing traders should trade, because they're going to potentially do a lot of damage. It's advanced, it really is. So if traders cannot discipline themselves to develop, then they already are on their way out because they're responding to FOMO. So you always have to be asking, what is the reasoning that you do something, not the impulse, because you're not doing the what does it mean, where does it come from, what's the therefore. I want more setups. How about this? Does that sound like you? I had 32 that I was working at one point many, many years ago. How many do you want? How many do you start with? A lot of us go, well, I want more setups. What is that? Let's go to the therefore. That's the lunatic under the hood who wants to gather more food for the winter. The survival instinct. That's FOMO, you see. But we don't extrapolate the root of the emotion. That's mental or part of that primal wiring. You have to learn about these elements that guide you, and you make decisions on an unconscious level that are being triggered by hormones and primal wiring. I'm just going to mention that. Can't spend a lot of time on it. So we have our liquidity here. Now I'm looking for shorts. My first trade is a short. So and this one was a little hard because I needed to come under here for me to get short. This was my short. So took a stop on it. I'm trying to remember where I got into it. Hold on. I think it was here. Yeah, the entry was like up here, this variable high volume node. And the idea was to come across here and fall out the bottom. So that was the trade, okay? So this one did not, as they say, fly. So I didn't get my scale. So I got taken out. Don't mind telling you. It's just the way it is. It's part of the joy. So now I come across the range, And it's like, okay, now what? So now here I'm thinking, well, I've got this yesterday's high, and possibly I'm going to go up to that 70 and change thing. So that's what I'm thinking here. And this jumps into the book. So I get yesterday's high. That's fine. And I'm sitting here and I am going, what's going on? You know, should I be getting long? You know, I'm thinking maybe I got this, you know, I'm out of whack, which happens. So right here, I have this. And now I'm looking, right? I was looking here and I have high volume here and I'm back inside the range. So I'm right here, I'm kind of confused. Now, confused means it's not part of my plan. Now, I know this right here. My buyers were here. My sellers came in here. You can see them, change in behavior. This right here is resistance. This is a structured trigger. I did not take it. I'm okay with that because my context changes if I get outside of yesterday's range. If I get outside of yesterday's range, and there's yesterday's high, I have to be thinking long based on my plan. So this was like, what are we doing here? You know, is it going to break out, hold, and then I'm going to be taking longs? But no, it breaks back inside. So what I looked at, I thought of this like, well, my opening swing high is here. There's going to be stops. My liquidity is here. Okay. I get taken out. All right. That's fun. Now going to the moon, right? Break back inside. Now I'm saying, well, I think I want to get short again. And there's a little bit of that mental noise like, should I get long or short? Should I get long or short? But my plan, my emotions are questioning everything because it's moving around. My plan says, you're back in range. This was just a squeeze, and now we want to get short. Now, I don't know that till here, okay? And then here, I'm looking to see when we come back, what happens? Do we hold the mid? That's what this is, and then blast off. So what right here is my kind of my over-under for long or short. Then we get our report. So now my volume point of control is here. Now this report comes out, I get this, and it's like, you know, what's going on? Let me show you. So this is the developing volume point of control. And what it is this is the highest volume. Now we had the report and got ripped. Now I'm looking at this and I'm going, well, if now this is too high, and if I get inside of this, I can go south. So for me, I'm looking for shorts. No short up there would have been nice, but no short. This sets up, now here's the short. Let me show it to you. Now, some of these are somewhat advanced in the sense of you have to understand what's going on. And if you don't have a trade here, you just don't take it. You just wait for your bus. This is a business of patience. It's not a business of gambling. I mean, if you want to gamble, I always say go to casino, get the cocktails and the rest of it. But here, this is a trade in the TraderLab, and what it's doing is we've fallen out of the structure. Now let's go back to what else we did and what we didn't do. What did we do? We did not get here, which was a potential target, and we fell back inside the range, which sets up the selling again. So once, and this, I can't do anything with this. My eyeballs fall on the desk, but now I'm consolidating and I know this is the retail price. Now this can come outside and rotate back in. It's called mean reversion. And in responsive selling, and you're going to see some of these, it's outside in trading. So if I come out here and I can't get above this volume point of control, then I can sell it. But I don't know here. You know, it's all great in hindsight. You go, oh gee, I shoulda. Did that happen? I shoulda. How can you know if you shoulda and it's only clear in hindsight? You can't. So let's let go of what we shoulda. What's that voice in your head? I call it the lunatic, Hyde, Jekyll and Hyde. You know, that judgmental self. Oh, yeah, you shoulda. Tom, you shoulda sold the high of the day. Right, I should win the lottery, too. But haven't won the lottery, don't buy the tickets. So what does this tell us right here? This is absorption. There's the green bubble is delta. Now, I don't know here. As far as I know, buyers, up we go. I get a sweep here, and this suggests higher. What happens? I go lower. This is a trigger. Now, where's my resistance? It's there because my sellers are here, and it's here. High volume. Let's watch. We have a short there, and we have a TraderLab short there. And we are going for this, 46. That one, we got on. Or I did, I should say. And where do we come back? This is called a trigger. You can learn these. The idea, guys, in my opinion, is not to be a raving lunatic, but to say, okay, now I know where my sellers are. I know what didn't happen up above. And this, good luck with that. I don't trade these kind of reports. There's no risk management. This is the kind of thing, if your stop is up here, you'll get filled potentially down here, and they'll call you in about a week. That used to be when I used to get filled on the floor. It'd be like, where's my fill? Well, we'll have to get back in. So I just don't bother. Why would I take that kind of risk? Is it greed, FOMO, or is it just good business not to expose yourself to the risk that you cannot at least have a reasonable opportunity to manage effectively? And remember, in this business, anything can change at any time, and risk can always be an outlier. So this is the trigger. Okay, now how do I get short? What do I know? Too high? Now let's go down and quote time frame or fractal. There's my sellers. This now is where the buyers were here. That's why we went up. The sellers are there. Buyers, sellers, trigger. You guys still able to hear me? I need a check here, audio. Check, check, check. Are you still hearing me in Discord? Oh, okay, thanks everybody. Yeah, I don't know. Discord is down. Hold on, guys. I'm going to try to restart things here, see if I can get things going. Just trying to resolve some things here. Yeah, it looks like Rhythmic dropped out. I don't know what's going on here at the moment. I'm trying to get back in here, but doesn't look like that's happening. Let me see if I can continue with this for you. You still hearing me in YouTube? Yeah, you guys still hear me in YouTube? This is a short. The idea is to come down here to the naked volume point of control. So you have a short there, you have a short here, you have a short here. This is a structured trade. This is a target. Now we have an additional trade setting up here. I don't know if you guys can still hear me. Everything is down over here from what I can see. Okay. Yeah, thanks, Van. So this sets up another short. If this is too high, we can continue lower. We have over a 98% probability of potentially taking out the first hour's high or low. This is the first hour's low. So this short would target there, there, and out the bottom. For me, and this is not a recommendation, when I got under here, so I scaled, I pulled back here, I took another short against this structure. I'm going to try to show it to you. And again, I don't know what you guys are hearing or seeing. I have no data. Am I the only lucky one here who's lost rhythmic? I think I am having a problem. Everybody, okay, I'm just lucky then. 1 second here. Let's see if things are going here. All right. Theoretically, I guess I'm back in business. Sorry about that, everybody. Uh, so this is an additional short here. Let me show you the trigger. Now, this is location based. Yeah, definitely having some challenges over here. So this microstructure right here, I'm going to start throwing a shoe at my monitor if this keeps up. So this sets up a short trigger. The way this would work is the buyers are here. The key is the location. We see the liquidity press in. The buyers were there, right there. And then we break below, pull back and test. This is a short entry. This can be a short entry up here. It's all up to you. This. And then we're going for value area low. Target. And at 9:30, we have the IB. Now, the IB, don't forget, over 98% probability. You have to vet this for yourself. Once you get under the value area low, we have this CLVN at 15, and then we have yesterday's low as a potential target. Kind of messed up here with all this data. Sorry about that, guys. I don't know what the issue is, but really dropped out pretty bad here. Let's see if I can. It all should be percolating. Oh. Trouble in River City. Okay, let's see if we can get this. There's going to be a hole in the data here. All right. So that's not too bad. Now, this out here, and I'm hoping, let me just make sure that I'm in the right place here, guys. Okay. This out here is called mean reversion. And I was posting this in TraderLab. When you come outside, the trade, and this is I call this the primary trade that developing traders need to understand and vet. It's called outside-in trading. If this is the retail price, and so this is the developing volume point of control, so this is where the highest volume is. When the market comes outside, it's almost like if this is your mustard at $1 a bottle, and it's up at $1.25, you're going to get less buyers. If I get less buyers somewhere, and we don't know where that is, and who are the buyers? Well, initiators and buy stops. So this is part of the thrill. And what's hard about mean reversion is where's the outside edge. So it has its own specific challenges. But as a developing trader, you need to understand the locations. Yesterday's value area low, if I fall outside of value, and this is the new current developing retail price, so this now is too high, and I come back to it, and I have my sellers right here. I can be taking a short here. I can be taking a short here. I can be taking a short here, and I'm trying to come back here. And come out the bottom, perhaps. Let me see one other thing here. I got to check one thing. Yeah, okay. Yeah, that's called mean reversion. Now, with this data dropping, I wanted to make sure I'm looking at the right thing now. So this is the mean. So outside in. Now here, we're still, all of this is the outside. So all of this is shorts. And let me draw you a little box around this thing so you can see it. Right here, this is where the sellers took control. So when I get my buyers, I come back, I test here, your stop would have to go above the sellers, which are there. This is a short, this can be a short, and you're trying to come here. This is a short, you're trying to come there, and then out the bottom. And this is a potential target down here. I'm going to show you where that came from. All right, let me show you this. So this is 63.15. Let's come back to TraderLab and let's look at 63.15, 14.75. So this right here is an outside edge of this. So that is an area right there. So what we did is we went up. So in the ETH, we tested this, too high. I'm not paying that. We got yesterday's high, failed to get here, came back in. Once you're in, you're a seller. And then you're trying to come through the value area and come out back here to take this low out. And then potentially, go wherever. At that point, who knows? So, but this is the highest retail price from this whole distribution. So this is an outside edge of this fractal. So too high, too low. But the high volume is here at 03. So remember where the high volume is. The super high volume was 06. We're not paying that. And this is the retail price down here. Yesterday was too low. Well, maybe this is too high. If that's too high, is this still too low? Are we going to stay inside of this? We did take out yesterday's high. We don't have to take out yesterday's low now or ever. But if we get under here, then the long is in here. Here, let's think about if you were long from yesterday, what condition would your stomach be in? Would you be taking Tums for the tummy? Because you have your stops under here. So if we got the shorts out who were short in here, and now we got the shorts and now we have longs, what do you think might happen? Question mark. What do you think? So the longs are on the hook as far as I'm concerned. Now, that doesn't mean anything. It just means the longs are on the hook. I got to try to get IRT working again here. It is not excited with the problems here with the data. One more shot at it. And then, otherwise, I have to restart it. Yeah. It's like a little hand comes out and hits you. Okay, I'm going to try restarting it. Okay. 34. Let me try to get this here. This is an outside edge, and this is the IB. The IB, we have something called the IB continuation trade. It's a structured trade. Let me explain this to you. This is a low volume node. In other words, the volume as the volume is drying up, it means there's less potential buyers. Now, in the TraderLab, we have a couple of structured trades, and you have to vet these. There's nothing mechanical in trading. Wouldn't it be nice? Well, if you want to be a successful trader, it isn't about nice. It's about doing what other traders don't or can't do. And that is anticipating behavior, not predicting it. So what we know is out here, you notice how the volume is down here. The high volume is over there. That's the retail price. As the market's moving higher, you'll notice how the volume is tapering. Well, up here, we moved quickly. We broke away, and you see the acceleration. That area is not auctioned. So we can come back up in here to check it. So here's what we know. The first hour's low is here. There's going to be potentially stops here. We have the VWAP. There's going to be potentially stops up in there. So this is an area to observe. And this is not a recommendation for a short to come here. And then maybe out the bottom or none of the above. So let's see what it does. And let's see if I can get my IRT working again, which would be kind of nice. See if it gets going here. Oh. Let's see what happens here, guys. I'm trying to get IRT going. It's very angry at me. Okay, try it again. So let's watch this in the meantime. So we're coming outside, and this is an area to observe, not a recommendation. We have liquidity coming in over here. We got to go look back over here and see where our last location was. So I had a sweep. Sellers are here. Sellers were there. Sellers were here. This was extreme right here. So we're going to think about this area. I'm going to just throw a little line over here. These are not trade recommendations. Plus my data is a bit compromised. So just so you know. Icebergs are here. You can see the sellers. These buyers were absorbed. Sellers are in control. So this is an area, and this is the area I'm kind of looking at. And really, as long as we're under here, now anything can happen, right? So I'm just looking to see behavior. Let's just see if we get our behavior. Buy sweep, VWAP, IB, low volume outside edge. It can push anywhere up in here. So next thing would be to look for trigger. And that's going to be a microstructure with a change in behavior. So it won't just be some little blip. You'll see something a little more rotational, and then we want to look at the pullback to it. So here's our microstructure developing. You can see this little high volume node right here. Sweep. You can see this is flashing. We want to see what this does. And we have this coming in up here. These are things we want to be keeping an eye on. This can skew the book.
Yes, sell, size 250.0. Sweep ES sellers at 6,334.75.
This is called the IB continuation trade. The micro high volume is there. So this acts like your volume point of control in a fractal. So we had our sweep, sets up our trigger, and you don't know until you see the change in behavior, and this is not a recommendation. Then the idea of this structure is to look for retracement to it at some point or not at all, and then to look at the behavior up here. So we had our sellers here, we have our liquidity here, we have this guy in the book, skews it. So now we want to see behavior. This is not a recommendation. And subject to your plan, you can enter, well, subject to your plan. And this is not a trade recommendation. I mean, everybody takes stops. I just want you to know, don't sit there and do what I do. I take them, you take them. That's overhead and cost of production. So let's see what it does here. These are buy stops. This is delta. I'm looking to see now my sellers. So I got more buyers right there, more buyers here. Watch the delta. And we want to see if sellers will come back in this area now. We'll see what it does. There's your selling delta. There's your test. Let's see what it does. Remember, the market can do anything. So this is a structured trade. Now, the thing about this is, the place to be entering this trade would be here. One tick below here. Stop could be, and you have to vet this, 3 ticks above this. So whatever that is, 3 ticks. So 3 ticks up there. 1 tick below here. Put a helmet on. Not a recommendation. Then your job is to attempt to get risk neutral. The distance from this to up there is your stop. And then to get risk neutral, you're trying to get that same range, so you're buying the stop on your runner. And either the trades are going to work or it'll take a stop. So pretty much how this thing works. Now, if it pushes out, there's still another area up here. And you got this. So we'll see what it does. I hope everybody's getting something from this. Sorry about the problems with the data. I don't know what that's all about. Okay, I'm just trying to restart Discord if I can. 1 moment here. I'm going to give it another shot. See, hopefully I'm back in Discord for you guys. Sorry about that. Data problems. Part of the excitement. Buyers are here, sellers are here. We want to see this stay. If it pulls, then it opens the hatch and we can squeeze. That's all there is to this. There's nothing more. Not complicated. It's just random. The idea of this reversion trade is to come here. If this is accurate, and I can't tell if it is at this point. How we doing, guys? How we doing in YouTube? Are we still conscious? Sorry for the challenges here again. Let's see what this does. The idea of this, and this is what I always suggest in TraderLab, is the primary trade that we see most of the time is something called mean reversion. And the thing with mean reversion is what's difficult about it is where's the outside edge, because you're trying to pick outside edges. So here's your VWAP. So in the TraderLab, we have something called the IB continuation trade, which is reversion. We have VWAP to VPOC, same trade really, from different angles. So it's out in here where this trade, you now if you took it here and it comes out here, you take a stop and that's that.
6,337.5. Yes. Size 470.0.
That's quite a move. Do we have a tweet?
6,337.75. Yes. Sell. Size 451.0.
Function. Lunchtime chop. Function. Lunchtime chop.
So is that news, guys? Anybody know? I'm not seeing anything posted, so I really don't know. So if you had taken this, you would have taken a stop up here. It does look like news to me for that kind of bump. Anybody? Was there news? Russia, Ukraine air truce. Okay. Hey, John, how are you? Okay, so nothing doing now, just waiting. So there was news that took stops. Now we have to see the reaction out in here. Still, depending on the behavior, this is very tricky right here. We can either come back. Where's our VPOC? It's below us. See, I'm not sure if my levels are accurate, but this still might set up a short here. So it's not a recommendation. We just have to watch the behavior now because this is news. So news disrupts things. So no idea what will come next. We can come all the way back across here, and that's that. We've already got our low, or this is just a news squeeze, and then we can resume the auction down. So we'll have to see what it does here. Well, that's not going to work. Guys, sorry about this. I don't know why I'm having so many problems here with this. It seems that it's some kind of rhythmic thing. What do we got here? We are looking for a short here, not a recommendation. Just going to import some data. Maybe we'll get this thing going on. So this ought to come in pretty quick then. This was that news right here. So the idea of this is I don't have my data here now, but we were looking for a short here. So, here it is. Okay. So yeah, so this is your short and you're looking to come back under. So when news happens, it disrupts everything. It's like, so, and we get taken out on that. That's why you use stops, because depending on the news, you can have unlimited risk. So this set up a short, and the idea now is to put the same short back on that you got taken out of, if indeed that's your plan. For me, I just put it back on again, and if I get taken out again, then I just, move on. So this is still mean reversion. And here's just something that's a little strange. If I get taken, now we're trying to go here. If I get taken out here on news, does that make my position better or worse? If the market's short, and I remember the market goes up to go down. So if I get shorts out, then if it stops and I don't have buyers above, what does that do? It gives me the opportunity now to sell it again. And again, it's not a recommendation, but this is where I'm trying to go. And that's a decent trade if it works. So the first part of it is to get risk neutral. So wherever you get short, put your trade on, do your thing, get risk neutral. And then if I can get back under here, I'm looking to come back to the volume point of control, assuming that's accurate, which I think I can't even tell without the data being accurate at the moment. Guys, can you confirm where the volume point of control is right now? 22? Okay, thank you. Yeah, 22 is the target on this. I think that's okay. It's there. So we're trying to go, and this is called mean reversion, underline mean. So we're trying to go here. So this short is a legitimate short right here. News, stop, short, and again. So the same trade. This is just disrupted. Now, whatever happens, happens. Every trade is unique, right? So anyway, that's a trade. How many of these do you need? Now, we all take stops, but you've probably watched, if you've been watching these streams, you see me do the same thing every day. Now, the thing is, I do the same thing. The market's random. So this is where, when I talk about randomness, this is random. News, random. Huh? Okay. I accept that. Whatever happens, and any trade is unique, and whatever happens happens, right? So we'll see what it does. So that's so there and here, and then whatever. We can get down here, we got this. If we sit up here for some reason and this moves up, that creates a problem. But at the moment, 22. And then out the bottom, potentially take the low of the day out. And these aren't trade recommendations. So if you're in TraderLab, subject to your plan, I'll tell you my plan. I would take a stop. I'd put the trade right back on again. Same trade. You know. You guys have questions. I'll do my best. You hold on, guys. Sorry, guys, I'm back. A little emergency here. So we're going towards our target, and we are looking. And these are not recommendations. This is trading. This is TraderLab, and you can learn this. And again, I'm not saying this is going to work for you, but this is what we're doing in the lab. And the idea of the TraderLab, it's a community of like-minded traders who've come together to leverage their collective experience. Apologies for today's things. It's just been one of those days. This is what the TraderLab looks like. Remember, it's a professional community. It's for serious traders who are interested in the business of trading. And there's a lot in here, a lot of mutual support, research, data mining. This is an advanced methodology. It's not complicated. Actually, it's simple. What makes it advanced is you're dependent on your brain, not some canned indicators. You actually have to think and learn how the market works, why it does what it does, and how at times to get in alignment with structured trades that you can vet. The idea of vetting is to know, does it have a statistical probability? There's also a library of webinars. And start with the primer. It's got about 34,000 views. Meet the TraderLab. You might want to check that out. And stop gambling and start winning. Most of us are gamblers. We don't know it. And this is not a video game. If you approach it like a business, you might be able to create sustainability, but you have to do the work. I mean, the idea of TraderLab is we've all kind of walked in the same shoes. We've all done the same stuff. Nobody is unique here. There's no secret sauce, no holy grail, no magic indicator or grouping of indicators that does anything other than the same. And if you've been doing this for any length of time, you already know the truth. And yet, we think if we work harder, we'll get a different result. Actually, what it is, it's not so much working harder. Maybe you're trying to create something that doesn't exist in the business, and that's certainty because of our primal wiring to avoid risk. Remember, we're still trying to go here, and who knows? You know what's interesting about this? We all have the need to be right, and this is sort of like, do you have this in your vocabulary? It's going to do this. It will do that. You can't know what it's going to do. How do we know that a tweet or a piece of news is going to come out? So that doesn't mean it will do anything. It might do something. It might, if we have a statistical edge, get here. And it might, and this is called mean reversion. That's the mean. And it might take this out. And why might it? Why might it? Because there's sell stops here. What does the market do? The market goes up to go down. The market goes down, repeat, to go up. The market goes up, and it took out yesterday's high to go down. And if we get below here, then we can, and it doesn't have to do it today, ever or ever. But if we do get under this, there's sell stops here. You see? So if there's sell stops under here, then back here. Maybe not today, maybe not ever, but that's the auction. And then it's a matter of understanding that we are trading inside of it in fractals. What's a fractal? Think Russian dolls. Vertical integration of time frames, but they're not time-based. What's happening in here is not based on the clock. It's based on the participant behavior. And the auction. And what's the auction? This is the current retail price for your bottle of mustard. What was too high? Well, here, news. And what does the news do? If the market is going to go lower, potentially, and we squeeze and sweep out the buy stops, including the short that I talked about right there, which is from there to there, and you get whacked, then you put it back out again. You see? Now, this is called VPOC migration, assuming it's accurate, and I can't tell with my data the way it is, but TraderLab confirmed that. This is called VPOC migration. Now, either we push off of here, or we come back and check this. So 22, so right here, you got to put the micrometer down on this thing. and pay attention. How we doing? Are you guys tracking? Hope you're getting something from this. Again, apologies for today. Seems like it's been kind of crazy. You're saying the VPOC is correct? Yeah, Tom, same deal. Yeah, cost of doing business.
Sweet ES fires at 6,325.5.
Okay, guys, thank you. So anyway, this is kind of where we're trying to go, and you got to pay attention right here. Based on the microstructure, this is still where we're going, maybe. I'm never going to say it's going to do anything because I know nothing. I know what it might do. I know where it might do it, and that's what trade plan is. And it doesn't get much more, any deeper than that. The best you have is maybe I'll get here because this is the price. Is this now too high? This is now the retail price. If I come across here, I can squeeze. If I get under here, I can take out yesterday's low, and it doesn't matter. Now it's trade management. So let's pay attention together. And I've only got about 10, 12 minutes left. If you have any questions, post them, and hopefully my internet will keep it together. Please give a like if you're visiting in YouTube. And also visit the TraderLab. And I want to remind you guys, there's a contest going on right now. All you got to do is submit screenshots of your trades with, a couple notes, circles, arrows, that kind of thing. And if you post it, you don't have to register or sign up for it. You just basically toss them in the hopper, post them on Instagram, X, or LinkedIn with the hashtag free blue jacket, and you can get a chance to win over $600 in subscription value, 3 months of Global Plus and data, no cost. And if you don't currently subscribe to Bookmap, there is a free digital version. If you go to bookmap.com, download that. Watch a couple YouTube webinars or educational webinars that are on the Bookmap website. Get a little sense for what's going on and throw some shots of some trades on there. Why not? Okay, we're coming across here. This trade could be done. That's it. No biggie. How are you with this? Yeah, I know. There was a stop. I'm okay with this. Take this out of Dodge. Catch you later. And still not done. Just done with this trade. Now, this is not a recommendation. Some traders in TraderLab are going to have a trade on from wherever. Their stop's going to be way outside the range, and they'll sit with this through the rotations. Other traders, subject to their psychology and their statistical edge, are going to be managing this trade very closely, like right here, and maybe be out of it. Because what does the language say? Too low, new retail price. This is resistance right there. You can see it. This shifts down. Resistance, support, new retail price. Whichever way I come out of here is the direction I'm going to move. Now, not get long, unless it's your plan. For me, it's hasta la vista, back in the Barca Lounger. Does that make sense? Can you kind of see a way to kind of navigate this? Hope that makes sense to you. How we doing, guys? Please give a like if you're visiting in YouTube. If you have any questions, post them now, or use the link in the bottom of YouTube to visit TraderLab. There's no cost for TraderLab. It's open to everybody. Doesn't matter how long you've been trading. The idea of TraderLab is about the business of trading, helping you understand, shall we say, the business versus the fantasy. It's not a video game. It's just business. So how do you navigate a random distribution of outcomes? Same way a casino does. Okay, we got to watch this right here. We got to buy sweep. Stops are going to be sitting here. We're back at an outside edge. We come back inside, then it's back in the Barca Lounger. Let's watch here. We're in two-sided trade, if you notice, and this is too low. This was too high. So you could just be done with this. Outside edge is back up here. There's the VWAP and we have the mid. So we want to be conscious of these things versus unconscious. So it's very easy in this business to become myopic and just be looking like right here and going, oh, I'm going to sell this. Notice the algorithmic behavior. So let's watch. This is important right here. Let's just watch it. You got to watch this stuff too. This is all algorithmic here. You can see how it's flip-flopping. It's probably one player for all we know. Now, you never know what the intent is of this stuff. In other words, are these guys pushing it up so they can fade it? Don't know, right? I always say this kind of thing, algos, we're not competing with them. They're in a different business than us. So, not to worry. Too high, trigger, outside edge. Outside edge, too high, potential trigger, not a recommendation. This is a problem, okay? So let's just see what it does from here. Let's observe it together. It's not a trade recommendation. Remember, could go here or just continue to squeeze. And that's just a trade. You know, it's just the way it is. So we know stops are sitting here. And you got this. So let's watch what it does. This is very important down here. That's why it's a target. So think about it this way. If we return to the mean and the mean might be too low, then we can come back out here and either we're going to reject this again, this area, and come back down or squeeze. I still think this is an area to keep a very close eye on. Notice what this was doing. Now we have this in here. Let's see what it does. And if this lightens up and this starts pushing down, let's see what it does here. This is the location here where it was too high, right? And we left it. That was our trigger. We've come back to it. So far, we have not taken this out. Doesn't mean we won't. It's a location. Let's see what it does. What's always hard for us is because we don't want to, quote, take a stop, right? I don't want to be, quote, wrong. Have you ever thought about redefining what right and wrong is for you in trading? It's not about approval from the market. Like, yeah, you know, I get a pat on the back because I sold this and I get scaled before taking a stop. It's really more about doing the right thing in a random environment, not predicting what will happen. So what's the right thing to do? Well, the right thing to do is, where's your structured trades? We have them right here. So we need, and we have a low volume outside edge up here. So we have to watch the area. That's really the right thing to do. And if you don't have a trade, then there's just nothing to do. VWAP. In the TraderLab, there's a couple trades here that are reversion trades. One is, I've showed you a couple of them. This is one, but it's not mechanical. There are areas. So VWAP to VPOC is a structured trade. It's in the 60 PDFs I share. You guys can download those. It's nothing is mechanical in trading, and most of you guys by now probably know you see something and then you go try to replicate it. It doesn't work. To learn how to trade, you need to understand why. Why does it do this? Why might it do it? And then where might it do it? It's not put an order out here because we have a trade in the TraderLab called, VWAP to VPOC. There are 60 PDFs of these, and you can get ideas from. These are actual trades, and I'm not a vendor. There's no cost for this. Traders were asking me what I was doing, and I threw some screenshots together. I said, here, take a look at this, And order flow phenomena, bracketing algo, pushes here, pulls. I was short. That's where I exited. And then the market took off. This is how order flow might help you. There's just a lot of pieces here. And no, you don't come to TraderLab and, throw 30 days in the hopper and now your life has changed. Wouldn't it be nice? No, doesn't work that way. It's going to take you to kind of rewire your belief system in what this business is. It's not a business of prediction or being right, and it's not indicator based. It's really behavioral based. Now, indicators are price-based derivatives, and they follow the market around, like Google Translate, right? And that's all fine. But the thing is, the market is not mechanical. It is based on behavior. And the process of the market is to try to figure out where's too high and then where's fair. Where are we trying to go? Here. Not a recommendation. Nothing has changed. It's just probing for locations, and any trade can fail. And the idea is when you put a trade on, you want to get risk neutral. This is part of TraderLab, and then manage the trade. And either it gets a target or you scratch and your broker sends you a bouquet. I hope this makes some sense, and I hope you got something from your visit from the TraderLab today. And again, I'm sorry about the disruptions with the data. I have to call somebody up. I'm not sure. Who's Mr. or Mrs. Rhythmic? I have to give them a call. Thanks again, guys. Thanks for visiting TraderLab. Don't forget to leave the like, and look forward to seeing you tomorrow. Be sure to review today's stream and yesterday's to see how all these pieces fit together. One thing about trading, the market is random. You need to have anchored inputs. Same as the casinos. They play their games the same way. They're in a 100% random environment, but over time, they extract the dollars from the gamblers. It's up to each of us to choose which side of that financial equation you want to sit on. Thanks again for visiting the lab. Don't forget to like, and I look forward to seeing you tomorrow.